Alright guys, welcome back to Market Master Roland Attenborough. Today we're going to be discussing the S&P 500 and past performance. And let's just dive right in. So we can see that I've populated this chart here of the S&P 500 and the terrific upward continuous climb of stocks, and this is a beautiful chart illustrating the power that corporate or Fortune 500 companies have when the power of the US dollar erodes and they print money and they buy back their stocks so they don't have to pay you dividends. But let's go ahead and let's just first take a look at what's going on here with the past patterns, because that's initially what we're discussing. So since 2020, we had a major capitulation in the S&P 500, and I took previous models, the dot-com bubble, the 1987, the 1929, and the 2007 campaigns, and I just copied them on the I used the bars pattern. So if you want to go on your chart and do the same thing, I'm asking that you do the same thing. This is how we develop patterns and figure out what's going on in history. So bars pattern is the type of indicator that I'm using here. So let's just go ahead and look at the dot-com bubble, and from there I've lined up. We have to take a starting point, and we need to address that with our current market, and this is what we've done. And you can see that the expansion and contraction phases are somewhat similar and rhyming, and what we see is a pattern starts to develop whereby we see how the market expands and contracts given certain time frames. And it's my belief that we are about to experience a major super cycle, and we will probably also see some type of a corrective period in probably the 2008 period. I'm not saying we have to, but it's likely we could see something like that take place. Now, with the end of this cycle, this one will be culminating around the August period of 1920 or 2029, and we would see a likely time frame similar to what happened in the dot-com bubble in 2000. Well, let's go ahead now. Let's take a look at 1987, because we had a big crash there. So again, aligning the low with our current market low, we can see the expansion and contraction periods are rhyming or similar. However, we do get some divergence, and of course, there's certain market factors that take place at that time. However, we're seeing a rhyming of lows with the current market, and then a further expansion where we get a major expansion and then another contraction period here. However, this one rolled over and had a big expansion and contraction period similar to the last year's. And then, of course, the market took off here from our current low in April, and we are starting to see a similar move where we break out and move higher. And this 1987 turned into again another super cycle before culminating again and making an immense top with a major pull down, a major contraction, and is similar in length to the dot-com bubble, where we see the same time frame take place. Let's go down and take a look at 1929. This is, of course, a time far back, but history has shown us that we can see lining up the lows. We had a expansion period followed by another contraction, which is very similar, just rhyming, and then another expansion with a contraction period. And we can see that this market was following closely. I'm just going to move it down so that we can see it a little better. And that we had another expansion period similar with a contraction period. However, this contraction period in 1929 continued on a little more before the expansion took place, much like in our current market where we had a pullback here, and you can see we came up, sat down here, made a major low before a breakout here, and we are experiencing the similar rhyming market maneuver. So we are watching this now closely. Again, here we go. We made an expansion with another small contraction similar to our current market, and then from there the major market cycle kicked in, and we had this super cycle and this breakout. And in 1929 it was the roaring 20s, and this stock market maneuver took over everybody. And at that time you were hearing that getting stock tips from the guy cleaning your shoes, and the barber and stuff. If you go back and look at history like I do, you will see that a lot of the very similar things continue to reoccur. So from there we had an expansion and a major contraction before the market did. So this was the signal here, and then of course the market made a double top here, a head and shoulders, and was unable to get above this, and the deterioration of the stock market occurred all the way down into 1931 and 32 before it bottomed. So that's our 1929. So again, a similar topping and bottoming pattern. All right, so let's just move on now. 2007, our current housing bubble crisis that we experienced with Bear Stearns and AIG and the Lehman Brothers. They all got bailed out for making bad decisions, of course. And of course, consumers and traders alike and mortgage holders don't get this same type of treatment that these mega corporations seem to get. So let's just look, lining up the lows here again. We had another expansion period followed by a contraction phase. However, the contraction phase was deeper and longer and made a deeper low than our starting point. However, our current model has followed this, seemed to recover, but had another contraction period very much similar to this period. Then the market continued on with another expansion, similar to our expansion, followed by another contraction. Well, we didn't get the major contraction. However, it made a low before making a top again, followed by a sideways movement, which follows somewhat similar to here before another contraction period followed, and then another expansion, which is where we are in time right now. Then it was followed by a sideways with a small contraction here. That's what we've seen right here. And then another sideways with some upper movement before another contraction, which we're seeing in these other cycles before the super cycle broke out, came up, made a double top here, and was unable to get over its previous tops, indicating immense weakness. And of course, that's what happened in 2007, that housing crisis, and stocks across the boards plummeted before recovering in a couple of years after, or a year after, our major top. And once that reset had happened again, the market again started to gain another equilibrium. However, it was still followed by more contraction and expansion periods. So what I wanted to impress upon you, I don't want to impress you, I wish to impress upon you that when we look at previous markets, we can see that these anomalies, if you want to call it that, or patterns, as I like to call it, these patterns do in fact show us that history, it doesn't always repeat exactly, but it sure rhymes the same. We've in all of these campaigns, the time frames were therein the same, and before we started to see immense weakness in the market. So time is more important in price, and that's what W.D. Gann stated over and over and over again. And once time overcomes and overbalances in the market, then price has to follow. Anyways, guys, I thought I'd show you how these patterns line up and give us an indication of what we can see moving forward. And yeah, I am calling for a super cycle into 1929. As you guys know, that's some things that I've been releasing in previous tutorials, that the market is likely to see an expansion period and then a rollover. And is that what's going to happen? Well, it's sure seeming like that's what's going to happen. And this 2007 housing crisis, it took several years out into 2013 before it recovered and broke above its top before sitting back down again and showing some strength again. And this is how we read the patterns and the chart. So I wanted to note that the market has come back many times into what I call the comfort zone, and that seems to be this yellow line right here. And once the market gets comfortable with being up in these high places, it eventually needs to seek its gravity center, and it needs to find a comfort zone again where people are comfortable buying stocks again after being in a euphorious market. And this just seems to happen many times over, that we do the same thing. And it's just a pattern that I'm wishing to point out to you, that we need to watch out for the over exuberance in the market and the things that can happen. And stocks are cyclical, and they go through these cycles of expansion and contraction, and they expand and contract, and we just continue to have expansions and contractions. Now, do they always last the same amount of time in these small movements? Well, I mean, a year and a quarter, year and a half, we have these expansions here before we eventually get a reset, and it has to start over again. So for instance, back here, looking at, I'm just going to make this bigger so that we can make some determinations. So from our low here, by the time we made a top, that's taken us in 21 months. And it wasn't until about almost 31 months before the market had made a final bottom and we started to get, some strength occur. And after 3 years, of course, then the market started to get again more aggressive. So looking at that, is that the same as what occurs each time? Well, as we said, after, well, the other one was 21 months. This one happened to carry on a little bit longer before we started to see the the rollover in the market here. And of course, that again was. Let's have a look here. Again, 30 months, 31 months before, and again, the same as what we saw here, 31 months. Is that the same? Well, I'd say that it is pretty much a repetition. Let's just take a look. You and I will do this together so that you get an idea of what we're talking about. So taking this and putting this on here and lining it up sure looks very similar, does it not? Right? So, okay, let's just take this one. Again, making another euphoric top. Not quite euphoric here, but we had a pullback into this same period. Let's just keep moving this forward because this seems to be our guide stick now. So again, we'd be looking at something of a top somewhere in 2027 before a pullback here into the 2028 period before the super cycle begins again. And if we just keep moving this forward now from our lows, we keep zeroing in on tops. So here again, we see that this pattern can expand and have another contraction. Is that what will happen? Well, it's possible and likely, and I just wanted to point this out and show you that time is more important than price. And when we look at time, we can see that history has taught us some very distinct lessons about what happens when we measure it against previous time frames. So that's what I got for you guys today. I wanted you to just be taught that time is much more important in price and that we are entering a major super cycle here coming up. And will we be revisiting this yellow line? Well, it's very possible that stocks come back at some point here and retouch upon this yellow line here. It doesn't mean it has to. We could have a capitulation down before we have a major top, and that of course could occur, in 2008 we could see some major move into this period here where again a major expansion takes place, right? We have a capitulation and then a major expansion. Again, a major capitulation and then an expansion. So we just have to be patient, and when the market makes its low or has a pullback or shows no sign of weakness, then we need to be ready to strike and move up with the market because we know that some type of super cycle is approaching, and it looks like there's a possible end to this euphoric move up where we've seen right now. This market has been carrying on for 17 years in a very aggressive uptrend, and of course we have had contractions, and some of them have been normal. Most of our contractions have been in the normal period. We've only had one that has been abnormal, similar to the 2009 low after we've made our top on this yellow graph of the 2007 market. So again, it's